Driscoll, Councilor Peniagua, Council President Hudson, and Auditor Maroon. So Commissioner O'Connor, why don't I turn it over to you, and then you can introduce it and go from there.
Thanks, Councilor. Good morning, everyone. So we have the audit of our June 30th, 2021 financial statements, which I sent out to the group this morning. If you did not receive it, please let me know and I can get it to you a different way. With us are Greg Evans and Keely Hines with the Bonadio Group, our auditors, and I will turn it over to them to share what they found.
Okay, thanks, Brad. Thanks everyone for their time today, and again for the opportunity to work with the city. We will be presenting the results of the audit today, and I will share my screen and walk you through a brief presentation. Okay, can we see that okay? All right. So what we're hoping to accomplish today is we're going to walk you through the scope of services performed. We're going to go over an executive summary of the audit. We're going to talk about some key financial highlights from our perspective, and also discuss what's new in the accounting world and give a brief update on the American Rescue Plan Act. So what did we do? We did an audit of your financial statements. I always point out that financial statements are yours. Our role is to provide an opinion on those financial statements. We certainly assist with the assembly of those financial statements, but again, the numbers are yours and you take responsibility for that. Key users are obviously management of the city, including the mayor's office, the common council. The rating agencies use these financial statements, and they also appear in your bond offerings. Grantors typically look at them. We also did audits of your federal awards and your New York State Department of Transportation award. If you have an award over $750,000, we are required to do those audits. And we've also issued a management letter to the city detailing what we think are some best practices. With that, I'll turn it over to my partner, Keely Hines, to do the executive summary of those reports.
Thanks, Greg. Good morning, everyone. So you all may recall that we provided an engagement letter that outlined our responsibilities and the city's role and our role in the execution of the June 30, 2021 audit. We did that on October 6, 2021. You will have received from Brad a few-page letter that is titled Required Communications. This executive summary hits those key highlights from that letter. We typically describe this in simpler terms as the report card. It really kind of buttons up the results of the entire audit and how things went and whether there were any issues, audit adjustments, and things of that nature. So our independent auditor's report will be included and attached to your financial statements on page 1 through 3 of your full financial statement packet. And we issued an unmodified opinion on each of those opinion units. That's the highest level of assurance that we can provide, and that is the opinion that you are looking for on your financial statements. Further, we report on internal control over financial reporting as dictated by government auditing standards. And that report is on page 103 through 104. And we are happy to report that we did not identify any deficiencies in internal control that were considered to be material weaknesses. And we also did not report on any significant deficiencies. In that required communication, we outline whether there were any significant changes to your accounting policies and estimates. And actually, as dictated by the Gasbi for the year ending June 30, 2021, the city adopted and implemented Gasbi 84. In your financial statements on page 82, there is what we call a prior period adjustment footnote. It's footnote number 13 that'll outline the details associated with the implementation of this Gasbi requirement. So this impacted the city in two ways, on both the district side and specifically on the city side, again, of which that footnote will outline. You will see on the district side the impact of what was previously included in the agency fund had liabilities that no longer met the definition of fiduciary that needed to move over to the district's general fund. And then furthermore, for the district, the extra classroom activity funds used to sit in that agency fund. And it was determined by the Gasbi, as well as interpreted at the New York State level, that those ECA activities really no longer met the definition of fiduciary, and they should be, those transactions and activities should be recorded as a special revenue fund. So when looking at those district related financial statements, you will actually see that a new special revenue fund was set up to specifically highlight those balances associated with ECA. On the city side, there were dollars that came out of that previously reported agency fund that were determined to actually be liabilities of the city and therefore needing to be recorded in the general fund, similar to the school district. There are, in fact, remaining liabilities that still met the definition of fiduciary to the tune of about 2.5 million. And those remained, with the difference really being a terminology change. So you'll see that that agency fund terminology is now referred to as a custodial fund. And those relate to county tax collections on behalf of others. And again, under Gasbi 84, those types of transactions still meet that definition of fiduciary. With regards to audit adjustments, we are happy to report that there were no material audit adjustments proposed as part of our audit. The takeaway with that is really that means those records and those balances that the city had at year end reflect what ultimately made its way to the year end financial statements. So when we performed our procedures, we did not have to go back to management and say, we think we found a material misstatement. In order for these financial statements to be presented in accordance with GAAP, these changes need to be made. What was identified is some small, immaterial, unadjusted differences, and those are attached to the back of that required communication. And you will see that all four of those entries really relate to uncorrected misstatements from the previous year. So there were some issues with cutoff between fiscal year ending 2020 and fiscal year ending 2021. So when those were passed in the previous year, we still have to consider the impact of that cutoff difference in the 2021 year. So those aren't new differences. There were no new items that we felt were significant to report to you in terms of unadjusted differences identified as a result of the 2021 audit. They're simply the impact of last year's unadjusted differences. In summation, we did not encounter any difficulties in dealing with management and performing our audit. And then, of course, as part of our audit of the financial statements, as Greg had mentioned, we did conduct a couple of single audits, one being of your federal funds. Our single audit focused on two major programs, the lead hazard reduction demonstration grant and the highway planning and construction cluster. When we conduct our single audit, we consider two major things. We consider whether there's any non-compliance, and then we consider the internal control over compliance, which is a required consideration point when we conduct an audit under uniform guidance. So we take a look at the design of the internal controls that the city has put in place to mitigate any risk of non-compliance. And then we actually test that those are operating effectively. And again, I'm happy to report that there were no findings associated with the internal control over compliance. Page 111 of your financial statements actually lays out a nice one-page summary of the results as it relates to any findings and where we landed with the financial statement and the single audit. So I always kind of treat that as a little cheat sheet and direct the reader to that page because it's a nice way to button up the results of the audit. And lastly, with regards to the New York State single audit, we too issued an unmodified opinion on that as well, and nothing to report at this time.
So at this point, I'd like to pause and thank the team at the Bureau of Accounts. This is the first time we've issued this financial statement before year end, meaning before December 31. In a very long time. And that took a lot of hard work to both be ready for the audit and provide us with information that was both accurate and timely. So I'd like to thank Brad and his team for that. And certainly the fact that we don't have findings this year, we haven't been at this point in a long time. I don't remember the last time, quite frankly. So again, I think it's notable that we're at this point with no findings. Any questions about the reports before I head into the financial highlights? Okay, so in terms of your financial statements, we have two major types of financial statements that you see in there. One is the government-wide financial statements, which can be described as all of the assets and liabilities of the city, both long-term and short-term. Most of the time, I will point out that this is not a terribly helpful tool in managing the city. I like to use depreciation as the example of that. Depreciation is required. We're required to evaluate your assets and the depreciation related to those. Depreciation obviously does nothing for the city. It's a tax term, quite frankly, but the government accounting rules say that we have to present them like that. So when we look at the government-wide financial statements, we note that there's a deficit balance of $637 million, which of course seems a little overwhelming and possibly alarming. But I will point out that, when we look at what drives that, it's the other post-employment benefit liability, which is your retiree health that you expect to pay for all of your current employees and current retirees over their lifetime. So, and that number amounts to $823 million, which obviously is the key driver of that deficit balance. There is significant detail in the notes to the financial statement that describes how your actuaries come up with that $800 million number. Also information related to your other liabilities in terms of maturities of your bonds payable, your pension liabilities, and again, a breakdown of some of those capital assets. So the footnotes are actually a better place for information related to those long-term assets and liabilities. With that, we'll move on to the fund financial statements. The fund financial statements more reflect the, let's call it the budgetary basis that the city operates on. Obviously, you adopt and follow an annual budget every year. With that, we tend to focus on fund balance, which is in accounting terms, it's your assets minus your liabilities is equal to your fund balance. For the current year, the city expected to use about $8.9 million of fund balance, meaning you were going to dip into your savings and balance your budget with fund balance, and the school district was planning to use about $25 million in fund balance, and that was in your adopted budgets. Well, what happened? Obviously, we had a pandemic. Things did not go as planned in so many ways, including the results of your financial statement. So in the city's general fund, you actually added to your fund balance of 40 million. So almost a $50 million swing there. And it's this is something that we've seen with all of our local governments. Everybody prepared for the worst. You cut expenditures. You expected revenues to dip significantly. The reality is you ended up with more revenues and less expenditures, which again creates a significant fund balance increase, which you see in your financial statements on page 21. Same thing happened with the school district on an even bigger scale. So again, when we talk about fund balance, the key thing that we talk about in most cases is unassigned fund balance, which is essentially the city savings account. There are no restrictions assigned with that. That increased by about 49 million, and I'll show you a chart in a couple minutes that sort of lays this out a little bit better visually. So, but in general terms, we think about the things, and I'll flip to the next one here. Sales tax revenue was more than expected. Both state and federal revenues were more than expected. And again, expenditures came in at about a 10% favorable variance. All things that really couldn't be predicted when you adopted the budget for June 30, 2021. As we talked about, another key change to those financial statements was Gasbi 84. Keely walked you through the details of that. And again, that's additional information related to that is in the footnotes. So here's a chart now, again, of your both unassigned and assigned fund balance. Assigned fund balance is typically what you would use to balance the next year's budget. That dipped significantly. So again, an increase in the unassigned fund balance up from almost 33 million at the end of 2020 to approximately 82 million at the end of 2021. Certainly unexpected, but certainly consistent with the fact that we went through a very unpredictable time. So next chart here just sort of lays out your general fund revenues and expenditures. Again, an increase in revenues, decrease in expenditures led to a significant budgetary surplus for the year ended 2020-21. Any questions related to those numbers? I know they're very high level. And certainly, as you get into these financial statements later on, both Keely and I are available to answer any of those questions that you may have. But any questions right now?
Yes, Greg. Could you talk a little bit more about the $800 million estimation as to how you got that? Just walk us through a little bit.
Okay, yeah, going back to the OPEB liability. So again, on an annual basis, the city works with an actuary to calculate this number. And basically, they take the benefits that are available for retiree health, and they factor in, life expectancy, expected health insurance costs, medical costs, things like that. And they take the demographic of, basically all of the employees of the city and all of the retired employees of the city. And they basically say, all right, what is the city going to pay for retiree health insurance, over time? Now, I will point out that this is a giant estimate. This changes significantly based on those factors, based on market rates, based on the prediction of healthcare costs, things like that. So one of the things we do have to point out is you do have significant estimates in your financial statements, and this is quite honestly the biggest one. So that 800 million is it's something to keep in mind, but it's also something that I could come back to you next year and that number could be 650 million based on market conditions, and it's happened like that. So that's the basis of that 800 million.
Okay, and I take that based on your recommendation here that you have given us as a city some measures that we could potentially do to kind of work with it and make it favorable for us, right?
Yeah, I mean, your consultant generally does that, and I think just from an outsider's perspective, I think they've done a good job of sort of tweaking those numbers, and I think I'm certain that Brad could comment on that further, but certainly you've employed one of the top level consultants that certainly manages that number. Let's put it that way.
Thank you.
Yeah, Greg, I think that's a good explanation. I'll just add a bit to it. It's a big estimate, and we're looking in some cases, or the actuaries in some cases are looking 40 years in the future and predicting healthcare trends, predicting how people are going to act and how much these things are going to cost. So maybe that 800 million becomes 600 million, maybe it becomes $1 billion. 800 million right now is the best estimate. What we do know is it is significant. It's very significant relative to the size of the city, and it is something we have hired consultants to review. There is no plan to change this retiree benefit anytime in the near future. So that liability will be there. We will end up paying something close to that amount in the future, and we'll just continue to manage it the best we can.
Thank you.
Brad, and Greg, I think it would be helpful at some point if we could have a sort of a graph perhaps of the ARPA money and how it has affected all our budget lines. I know Ms. Tift sent us a detailed overview of ARPA money and where it is in the pipeline as far as it being allocated in the pipeline and being spent, but is specifically towards our budget, overall budget, and how it's impacted this last fiscal year. I think that would be helpful if that could be done or not.
Councilor Hogan, I will get together with Director Rudd and see if we can put together an answer to that.
Thank you.
Okay, any other financial statement type questions before we move on to our Gasbi update?
Okay, thanks, Greg. So with regards to the Gasbi update, I'm going to take a quick step back just to kind of remind everybody where we've been over these last couple of years. So in May 2020, the Gasbi released statement number 95, which modified any of those effective dates associated with those pending Gasbi pronouncements. Basically, they recognized the results of the pandemic and pushed those implementation dates, allowing for folks to have a little bit of wiggle room with having to make some pretty significant changes. So as we've already discussed this morning, as a part of fiscal year June 30, 2021, the city properly adopted and implemented Gasbi number 84 that initially would have been adopted in fiscal year 2020. But again, as a result of 95, that due date was postponed. Now, in looking ahead, initially Gasbi 87 related to leases was going to be effective for June 30, 2021, but the revised effective date is now pushed to June 30, 2022. So in your next fiscal year, that requirement will need to be adopted. We've had some conversations with management already on this standard. In simple terms, what you can expect is that next year, associated with any leases that the city may have, you will see on your government-wide financial statements where long-term assets and long-term liabilities are recognized, you will have a right-to-use leased asset and a long-term liability associated with the obligations of those leases. Under this standard, there's some clarity with regards to what actually defines a lease and what types of things will be applicable under this umbrella. And we will work with management during this off season in preparation for June 30, 2022, just to ensure that everything is on the right path for a smooth implementation of 87 for next fiscal year.
It's certainly a significant accounting standard that will require some significant attention. Whether the results of it produce anything that is more transparent in your financial statements, I'm not quite convinced of that. But certainly it's something that the rating agencies are looking for us to comply with. So, and we will certainly assist the city in doing so. So in terms of the American Rescue Plan, I just wanted to spend a minute or two here and talk about the fact that the Treasury did come out with a final rule in the first week of January, which was welcome to all of our governments for a couple reasons. Number one, they provided some additional flexibility with the ability to spend in different areas. And number two, it sort of took away the uncertainty of whether those rules would change and whether, you know, what you had done were in compliance with the new rules. Anything that you've done before those new rules came out, they basically said, hey, if you complied with the interim rule, you're fine. We're not going to enforce anything related to that. They also said the final rules are effective in April of 2022, but go ahead and take advantage of the additional flexibility that has been provided. One key thing to point out is they've simplified the lost revenue calculation, which again allows the city to spend under the category of government services, which is a very broad category. We know that the city's had some revenue loss, you know, based on what happened from 20 in comparison to 2021. They gave us the ability to include the water fund in that calculation, which was previously excluded. Not really sure about the logic of excluding it to begin with. So again, a welcome flexibility there. They added some definitions related to populations impacted and disproportionately impacted by the pandemic, which again, I believe gives the city opportunities to be more flexible with the spending. They've provided for the modernization of cybersecurity, including hardware and software, again with the theory that you can carry out the program-related aspects of ARPA with better equipment and more efficient government. They've also broadened the use of water and sewer projects to include things like culvert repair, again with the idea that, you know, it's my personal opinion that the Treasury wants this money spent. They want to provide local governments with the ability to spend this money. I will remind you that you need to obligate your ARPA funds by 12/31/2024 and finish up any projects that you have started by the end of 2026. So that's the quick overview of the 444-page final rule, which of course I've read every page of it, and I'm still alive to talk about it. So, any questions about ARPA? I will point out that, certainly we will be working with the team at the city, because I would anticipate this will be a major program for your single audit next year, assuming that you start expending additional dollars in that respect. So not hearing any questions, that's the end of our presentation. Again, I'd be happy to answer any questions down the road. Unfortunately, Jake Skevel, who was the manager of our job, is out ill today. Jake was obviously a key component of our team, again, in assisting in getting these financial statements issued by 12/31, which I think both the city team and the Bonadio team are both proud of the fact that we were able to do that this year.
Thanks, Greg and Keely, and I agree. Jake has been a tremendous help. Certainly, we wouldn't have accomplished what we did this year without Mike Canizaro and his team. I mean, coming in here 2 years ago and to be able to turn this thing around so quickly was amazing. But I'd also like to give a lot of credit to you, Greg, Keely, Jake, and your team. We in BOA, we have one person that was in BOA 3 years ago. So a lot of turnover here, a lot of new people, and to be able to rely on both your expertise and knowledge of the city that comes with the 30 or so years of auditing has been invaluable. So thank you for that. Thank you for kind of shortening the learning curve for us to get to where we are today.
Our pleasure.
Okay. Any other questions from councilors before we close it out?
Councilor Green, could I enter in?
Sure, go ahead.
First of all, I'd like to thank Brad and his team. In concert with Greg and Keely and Jake, Greg has heard my song for 12 years, asking that we get the external audit completed by December 31st. As a former counselor, it was very difficult to receive this report at the end of March, to receive the mid-year transfer, to receive the capital improvement plan and the proposed budget for the next fiscal year, all at basically the same time, and then be able to intelligently read and discern through those materials, especially when you're not an accountant, to understand what was going on. So Keely, Greg, and Jake, thank you for what you did for the city, and Brad and your team as well. This is a major step forward. The contribution that the Syracuse Airport Authority realized that they could get their report done in accordance with the authority's law, and the district has been getting theirs updated in a timely manner, I think provides a great pathway for us as a city to manage our finances. So I want to give all of you a shout out and a vote of appreciation for it. Secondly, Greg, I would appreciate your clarification, or Keely, on page 103 and page 104 of the document. in clarifying what you have on the second paragraph on 104 up against the first paragraph, which you have for 103. Because when you say that there's no, when you qualify the internal controls in your document and what you're doing, and it is mentioned, it's articulated in your document, that the difference between what our office may find in relative to internal controls versus what you're stating here, could you clarify the difference as you view it, Greg or Keely?
Yeah, absolutely. So when we're discussing internal controls, first we don't give an opinion on that. We evaluate your internal controls as part of our audit planning so that we can have an audit plan that gives us assurance as to the financial statements not being materially misstated. So in talking about those internal controls, we're talking about the broad controls that allow the city to process transactions, again, that end up in these financial statements that allow us to basically say that the city's financial statements are presented without material misstatement. So, and I think, Nader, you and I have discussed this before. What is material to these financial statements is not necessarily what your office or even the general public might view as significant. You know, and I'll use the example of, let's say that we found $10,000 walked out the door. In theory, we would say that's not material, but it's certainly significant. And certainly we would want to know what the controls were that would allow that to happen. So, but again, we're looking at things at a much higher, much broader level when we're talking about millions and millions and millions of dollars that flow through these financial statements. And certainly the audits that you're doing, Nader, are certainly more granular and detailed, and you know, and we sort of rely on the city auditor's office to do that, to look at those lower level accounts, whether it's, you know, collections at a city ice rink or you know things along those lines that certainly wouldn't hit our radar, but are certainly important to the city and certainly fit into the you know entire reporting operating entity. So I don't know if that was sort of a long answer to maybe a shorter question, but you know I just want to demonstrate the fact that you know our audit is looking for those broader type misstatements than an audit of the city auditor's office would do.
Thank you. I mean, I obviously understand it and have been mentored by your predecessor and yourself over the years to understand and distinguish between the two. However, sometimes I think it gets confusing to people, and maybe it's just my the lack of real estate between my ears to understand it. But I just wanted to make sure that that comes from you and not from me, although I will say it time and time again, but I think it's important to hear it from you. So I appreciate that. And again, I'm just, you all have done a great job, and we're fortunate to have a team and a body of work that you and Brad and his office have put together. It's encouraging, especially in these troubled times. It's really encouraging. There's a lot of information out there right now, and a lot of confusion, I think. And so the clarity in which you presented and what Brad and his team's been able to provide you all, and the fact that you didn't have to wait 3 months to get access to information. This year is, a major improvement.
Yes, that certainly helped expedite the audit.
So thank you, Counselor.
Any other questions before we close it out? Okay. Well, I thank everyone for their help and work on this, and we will close the meeting. Thank you very much.